Professor Witold Henisz, and this is Great Question, where Wharton professors like me answer your burning questions. Our topic today is ESG. First question is, what is ESG? ESG stands for environmental, social, and governance. Three factors that influence business profitability or business performance outside of the traditional accounting statements, outside of the traditional factors we think of. Environmental issues include issues like climate change, pollution, waste that firms generate and that impact the communities and the societies around them. The S factor, the social factor, includes a firm's impact on its customers, as well as on its employees and the communities in which it operates. Topics like diversity, equity, and inclusion, topics like worker rights, worker safety, human rights, community relations, stakeholder relations, and customer value all fall under the S dimension. And G, the governance factor, has evolved from thinking about the way managers deal with their shareholders to the way that managers deal with a broader set of external stakeholders, including government actors and civil society actors. The key is to think about how these ESG factors influence company performance or influence an investment thesis. And we can do that in public equities, but we can also do that for other asset classes. We could do that for fixed income. We could do that for real estate. We could do that for a wide range of investment asset classes and also investment theses, investment strategies. Another user asked, do you think ESG should include diversity, equity, and inclusion? I do, and it does. But diversity, equity, and inclusion is also its own important area that's been around for a long time. There's a lot of insight to be gained from it. ESG is really an umbrella way of organizing a lot of environmental topics, including climate risk, a lot of social factors, including DEI, and a lot of governance factors like corruption under one broad umbrella or one broad structure to make sure we think about all of them at the same time. It doesn't replace or supplant them. It just tries to draw them together into a single conversation. Another user asked, how does a company prioritize work environment sustainability while balancing productivity? If I understand the question right, I think there's an assumption behind it that I'd like to challenge, that there's some kind of trade-off between the environment and sustainability and productivity. Often when we reduce environmental waste, environmental pollution, or the consumption of natural resources, we actually reduce costs and we enhance productivity. Think about what happens when Walmart puts on solar panels or reduces the waste in its packaging. That reduces its cost, either in terms of how much electricity it has to buy or in terms of the amount it spends on waste disposal. And that allows Walmart workers and Walmart managers to be more productive. Similarly, if FedEx switches from regular fossil fuels to electric vehicles or alternative energy in its vehicles, it's reducing the consumption of gas and other fossil fuels, and it can deliver more packages for the same amount of money. So I think in many cases we can find win-wins where we can actually reduce the impact on the environment and improve productivity. Now, there are going to be cases where that's not true, maybe this year or 2 years from now, but what about 5 years from now when the price of fossil fuels is even higher? Or what about the long-term impacts on worker retention and worker productivity? There may not be a trade-off in the short term, and there may be even less of a trade-off in the longer term. Our next question is, how would ESG be beneficial to developing countries? Well, countries are also impacted by ESG factors. Think about the resource depletion that's occurring in Brazil, Indonesia, or Malaysia, where the rainforests are being burned and clear-cut to make way for palm oil plantations or for grazing of wild animals. There's a short-term benefit there, but there's a long-term consequence in terms of the sustainability of their tourism sector, for example. And other parts of the economy are also negatively impacted by the smoke, by the lost worker productivity due to environmental contaminants. So countries also can think about their pollution impacts. They can think about their impacts on what's happening to the long-term sustainability and productivity of their workforce. And they can also think about corruption. So we can think about ESG at a country level the same way we think about it as a company level. Another user asked, ESG has been criticized for greenwashing. Should the term ESG be more regulated? And there was a related question, is ESG just a gimmick for fundraising? This is a big concern right now and a really genuine one. There's a lot of people adopting the ESG label as it comes into more common use, and everybody's putting it on to different products and different investment strategies. At the Wharton ESG Lab, we just finished a working paper where we showed that most of the funds and ETFs that market themselves as ESG oriented actually look just like their benchmark funds, plus or minus one or two stocks. they're not really doing anything that dramatically different. They're just trying to take advantage of the label ESG, which everybody's talking about and which has all the buzz right now. There's a lot of valid criticism of what's going on in ESG. There's a lot of mislabeling. There is a lot of greenwash, but there's also a lot of good work being done. And we need to really focus in on that good work that's drawing a link between ESG factors and performance, and not throw out all the progress that's been made just because some people are engaged in cheap talk or greenwashing. The question as to whether the government should regulate what we mean by ESG is a more subtle one. I think we should have some standards and some basis by which a company or an investor, an asset manager has to explain what they mean when they put an ESG label on there. And the European Union and the US government are looking at ways of doing this. I think there's promise there, but we'll also have to be careful as consumers and investors beyond whatever the government regulation demands to read carefully and to understand what we're being offered. Our last question is, can you passively invest in ESG companies? It's a great question. When we think of ESG, we often think of an active investment strategy where we're really trying to understand how ESG factors affect a company's performance. And maybe that's affecting whether we put that company in our portfolio or what our analysis is on the growth prospects of that company, or for some investors, whether we exclude them from the portfolio. When we think of passive investing, we usually think of holding all companies. And so we don't think that can have an ESG strategy as part of it because you're holding everybody. But that's not true, because it's not just what you do in terms of buying and selling that affects a company's direction and its future. It also depends how you vote as a shareholder. And many of us don't use our power as voters when we own shares to drive change in companies. But there's a new ETF offered by a company named Engine Number One called the Transform 500 with the ticker VOTE. And what you do there is you hold every company in the S&P 500 the same way you would in any other index fund. But when they vote according to ESG criteria. So you're guaranteed the same returns as the S&P 500, but your votes, the weight of your ownership is going to drive those companies to be more conscious of ESG factors. And so there is a passive ESG play. And again, the ticker is VOTE and the company is Engine Number One. If you want to learn more about ESG, there are a couple places to go. There are 2 more panels led by our dean, Erica James, on the topic of ESG that are part of her Beyond Business series, which you can watch on LinkedIn Live. Also, in early 2022, we're going to be launching a Wharton course on ESG topics, featuring a number of the faculty that participated in those panels. And in the interim, you can always follow me on Twitter at Henisz, Henisz. Thanks again for joining.